Thinking Byzantine here. Today we'll be talking about the ARKK or ARK Innovation ETF. Now for a quick disclaimer, I am not a financial advisor and this is all my own opinion. Your investments are your own responsibility. Note the financial state of a company or ETF is subject to change and any information presented could change as well. The information I'll be using was from January 12th or before. Now ARKK's methodology is quite simple. They invest in domestic or foreign equity of companies that are relevant to the fund's investment theme of disruptive innovation. Now here are the stats for ARKK. They were founded in 2014. Expense ratio of 0.75%. Average price to book ratio of 9.32. Assets under management of $8.9 billion. Over $500 million in liquidity on an average daily basis. Current dividend yield of 1.48% based on their last distribution. Current share price of $140.99. And their average annual returns over the 5-year period is 38.07%. Now here are the top 5 holdings for ARKK. So we have Tesla, Roku, CRISPR, Square, and Teladoc. Tesla is going to be their number 1 stock at around 10%, a bit under 10%. And here's their sector weighting for ARKK. We have healthcare at 34.35%, information technology at 30.7%, consumer discretionary at 18.25%, industrials at 8.62%, financials at 7.1%, and telecommunications at 0.99%. Now, why would you invest into ARKK? Well, one reason is because of their manager, Cathie Wood's. And if you believe in Cathie Wood's methodology and ability to pick stocks that are disruptive, then ARKK is for you. ARKK has also had a strong performance against S&P 500, and the picks of ARKK are aimed at disrupting technology, and these type of stocks are going to be usually considered growth stocks, which usually have high capital appreciation but a bit higher risk. Also, the picks in ARKK are going to be the best of the best of the ARK portfolios. Also, with an ARK, since it's actively managed, you can look up their buys and sells if you want to try to mimic their ETF. Now here's ARKK vs SPY since inception. As you can tell, over the last 6-ish years, you'll see that ARKK has been outperforming the S&P 500, especially in 2020. Now, why would you not invest into ARKK? Well, the reasons are quite simple actually. If you do not have faith in Cathie Wood's ability to pick stocks, then I would just avoid all the ARK ETFs in general. And if you're unable to stomach drops due to the nature of these type of stocks, i.e. if you bought high and you're probably going to sell low, or you're going to have a panic attack when you see, let's say, the ETF drop 5%, then this may not be for you. And a historical example of something like this, though their stock choices were not necessarily of the same type, was the Magellan Fund by Peter Lynch, where people were actually losing money, even though Peter Lynch's mutual fund was averaging over 29% a year. The picks in ARKK may be seen as overvalued based on their current balance sheet. And the expense ratio of an active ETF is greater than a passive fund, like let's say you bought VU. For example, the expense ratio on VU is going to be a lot lower than ARKK's. Now please like and subscribe for more content, and tell me in the comment section below, what do you think of ARKK? This is Thinking Byzantine, and have a good night.